We'd like to begin by thanking our partners and associates who have supported this venture. Our title partner, Gitanjali Trust Forever, in association with Fiki Gems and Jewelry, Luxury and Lifestyle Forum. Our knowledge partner, the World Gold Council. Registration kit partner, Royal Chains Private Limited. Lanyard and invitation partner, Swarm Shilp Chains and Jewelers Private Limited. Our print media partner, The Art of Jewelry. Official logistics partner, BVC Logistics Private Limited. Our fashion partners, Shubham Motiwala Jewelers, SK Jewelers, P.N. Gadgil Jewelers, Vriddhi Jewels, and our associate partners, KBJ Group. Vimal Sant Jewelers, Raksha Bullion, Riddhi Siddhi Bullion Limited, Raj Bullion Private Limited, and Penta Gold Private Limited. Ladies and gentlemen, we begin with our first panel discussion of the day, which will be our fourth panel discussion of the summit. And in this panel discussion, we'll cover a series of issues. One is gold data. Is it correct or incorrect? Opportunities in gold mining and refineries around the world. World gold production versus its consumption. And the business growth in commodity exchange. Please put your hands together and welcome our co-moderator and moderator on stage. Please welcome Mr. Anil Singhvi, Markets Editor, CNBC TV 18. He'll be our co-moderator as he's been for all our panel discussions. And please do put your hands together and welcome our moderator, Mr. Rajesh Khosla. I've already introduced him for those of you who have come in just today. He is the Managing Director of MMTC PAMP India Private Limited, which is an outcome of a joint venture between MMTC, India's largest international trading company, and PAMP, Switzerland, the world's largest privately owned precious metals processing facility. And our panelists, please put your hands together and welcome Mr. Alistair Hewitt. He manages the World Gold Council's Market Intelligence Program. The Market Intelligence team is responsible for production of insightful research on the gold market. He holds a BSc in Economics from the University of Birmingham and an MSc in Economics from the University of London. A warm welcome to Alistair Hewitt. Mr. Vivek Jalan is Senior Vice President, NCDEX. He's responsible for the entire non-agri portfolio, largely consisting of bullion, energy, and base metals, and he comes with 2 decades industry experience in the physical commodity side, working in large industrial groups like Sterlite Industries, SR Jindal, and Uttam Galva Steel. A warm welcome to Mr. Vivek Jalan. Mr. Harish Purushottam Pawani heads Bin Sapt Jewelry LLC and PK Intermark Limited, 2 bullion trading companies of the Purushottam Kanji Group. He also heads Dubai Exchange Center LLC, a leading exchange house in Dubai. He is a director in Purushottam Kanji Exchange Company LLC, having the largest branch network in the Sultanate of Oman. Harish Pawani, a warm welcome. Mr. Harmesh Arora is Managing Director of National India Bullion Refinery, an integrated precious metals management company that has built its reputation on quality, reliability, and integrity. Mr. Harmesh Arora. Mr. D.K. Agarwal is Chairman and Managing Director of SMC Investments and Advisors Limited. SMC Group is among the top financial services companies of India. He is a fellow member of the Institute of Chartered Accountants of India, and he also writes for the Economic Times, the Business Bhaskar, and Times of India, among others. Mr. Gerard Schubert is Head of Gold and Commodities at Arab Banking Corporation, Bahrain. His career in precious metals and commodities spans more than 3 decades. He has been a member of the management committee of LBMA and the London Platinum and Palladium Market. Schubert is a regular speaker on precious metals at industry conferences and on television. A warm welcome to Mr. Gerhard Schubert. Mr. Sudhish Nambiath is a senior precious metals analyst at Thomson Reuters since 2012. Earlier, he worked with MF Global as senior metals and energy analyst in 2008. Mr. Sudhish Nambiath has a bachelor's in economics from the University of Madras and has completed management degree from IIBS Business School. Sudhish Nambiath. And rounding up the panel is Mr. Chirag Sheth, a research consultant and metals focus. He started his career as a commodities analyst in 2004. He joined UBS India in 2007, where he was part of the wealth management research. He is a visiting faculty at MET and FTKMC and also regularly features on business news channels in India. That completes the panel. Mr. Chirag Sheth and Sudhish Nambiath have a slide presentation during one of their slots here, and I've requested them to request our technical team to play the slides when they so desire. Ladies and gentlemen, it's over to Mr. Rajesh Khosla, and he'll take us through this discussion. Thank you. Over to you, sir.
Good morning. Thank you for coming. It's Sunday morning. We're a little late, but I guess everybody is nice and rested. And let's see if we can wake you up with something interesting. First off the block, Alistair, who has traveled all the way from London to come and attend this conference and give us the benefit of his views. Alistair, your World Gold Council. World Gold Council needs no introduction. World Gold Council, therefore, carries a very heavy weight of responsibility. When it comes to the data it emanates, it's responsible for the data. It's nice to know how you put this together. And how do you occasionally cross-check what you prepare? Because you've got this huge responsibility on your shoulders. So let's listen to what you have to say on that.
Much. It's an absolute honor and a pleasure to be here at the second India International Bullion Summit. It's been a fantastic few days hearing about the key issues affecting the market, and today I'm going to talk about two issues. Firstly, gold demand and supply, and then secondly, going to talk about the data, and we'll talk about the big responsibility that the World Gold Council has in producing and publishing that data and how serious we take that responsibility. So if we just start looking at demand, the picture in demand has been absolutely incredible if we just have a look at the past 10 years. If you cast your mind back to 2004, and we'll make a comparison with where we are or where we were in 2013, it's almost unrecognizable, the gold market. Back in 2004, gold consumption stood at 2,891 tons. Last year, it stood at 4,065 tons, over 1,000 tons higher. If we had a look at central banks and their attitude towards gold, back in 2004, central banks across the world were consistent sellers of gold. But now they've learned the lessons of the financial crisis. They understand how important gold is as a reserve asset. European central banks have agreed not to sell gold. They've signed the European Central Gold Agreement. Emerging market central banks have recognized the importance of gold and add that to their reserves on a regular basis. And that includes the RBI in 2009 when it bought 200 tons off the International Monetary Fund. And if we think about institutional investors, back in 2004, it was very difficult for an institutional investor to access gold. They often had to buy gold mining companies, a proxy for the gold price, to benefit from any gold price appreciations. And if we look at the gold market now, exchange-traded funds play a small but incredibly important role in the gold market. And if we look at jewelry, back in 2004, jewelry consumption accounted for 90% of total global gold consumption. Now, given the rise of central bank demand, given the rise of institutional investors, it only accounts for around about 50%. And if we just look at the gold price, back then it was around $409 US. Now it's about 3.5 times higher, or last year it was 3.5 times higher. It's fallen a little bit since then. So that's quite incredible. And also, if we thought about the gold flows, who's buying the gold, who's consuming the gold, that's changed. China, for example, back in 2003 or 2004, only accounted for about 7% of global gold demand. Last year, it accounted for 1/3. That's an incredible change over the course of 10 years. Reassuringly, there are some constants. India and India's passion for gold, that stayed steady and is a bedrock of global gold demand. And that, in the changing world, provides a great degree of comfort. That's very reassuring. And last year, if we just pick up on 2013, the narrative, the story that we told in Gold Demand Trends was a story of gold flowing from west to east. ETFs and Western investors sold their gold as they reappraised their outlook for global gold demand. And consumers in the East, households in India, China, and Southeast Asia responded with vigor. Some of the photographs of people cleaning out jewelry retail shops were quite incredible. We don't see the same flow of gold this year, but the west to east narrative still stands strong in my mind. And we can see that in the infrastructure that's developing in countries like China, where the Shanghai Gold Exchange has recently launched its international board and international platform, which will allow the largest gold-consuming and producing nation to have a greater say on the global gold market. In Singapore, a new exchange platform targeting the wholesale market's been launched. The CME Group has announced plans to launch a gold-backed futures contract in Hong Kong. And in India, we heard the fantastic story yesterday about how India acquired its first LBMA-accredited refinery. So we're seeing the infrastructure develop, which is going to continue to support the West to East narrative and see Eastern countries have a greater say on the global gold market. So this is probably a long-winded way of saying something quite simple. You've got diverse demands, very, very diverse demands, covering different sectors and different geographies. And the market is actually very, very dynamic. If we looked at supply, that's an interesting story too. And we compare it over the course of the past 10 years. Back in 2004, recycling accounted for around about 26% of total supply. And then the financial crisis struck. That caused a few problems. We saw countries, particularly in the US and Europe, we saw countries struggling, we saw economies faltering, and at the same time we saw gold prices at record levels. As a result, people turned towards their gold holdings to get them through these tough times. And as a result, you saw the cash for gold phenomenon take rise. You saw this particularly in the US, where cash for gold retailers sprung up on street corners, trying to get people's jewelry and recycle that and put that back into the supply chain. So that in 2009, recycling accounted for around about 42% of total supply. I guess the peak, the absolute peak of this would have been in 2009, when a particularly successful cash for gold retailer could afford the prime time advertising slot at the American football Super Bowl. And that says a lot about how important that industry was back then. But things have changed still. In the past few years, economies have improved, the gold price has subsided, and recycling as a share of total supply has declined. H1, for the first half of 2014, it registered its lowest level of recycling since the first half of 2007. And if we thought about mine supply, that's probably less responsive to prices. As we heard yesterday, it takes around 10 years for a gold mine to come from being initially found to coming on stream. So as the gold prices rose throughout the 2000s, mine production only increased gradually, so that last year it was just above 3,000 tons. This year we expect gold production to increase to a peak, and this is largely a result of legacy projects and legacy investments made in years gone by coming online. Looking forward, we expect gold mine production to plateau a little bit and possibly decline as we look to the future. So we've talked about demand. It's diverse geographically and across sectors, and we've talked about supply where it is at the moment. And an interesting aspect is to look about what's going to happen to supply over coming months and coming years. And we can look at exploration budgets. And we can look at exploration budgets, and we can look at data that from 2012 shows that exploration budgets were at an all-time high. And what's interesting is that new resources, new gold deposits, were actually at an all-time low. So despite gold miners spending record amounts of money to try and find gold under the ground, it's becoming increasingly difficult and increasingly hard to find it, and increasingly more expensive to get it. So there we have it on the demand and supply side, quite an interesting market, and it's changed a lot. And looking forward, I can only anticipate this change will accelerate and the market's going to change more. And now I'd like to say a few words about data. So I suppose the starting point when the World Gold Council looks at data is to recognize that the market is incredibly complex. The supply chains are very, very long, often spanning several continents. The end users are diverse. That's a phrase I've used a lot, but I think it's worth emphasizing. You've got different consumers, ranging from staid, boring central banks looking for an asset that's going to be a bedrock of the nation's wealth, through to people in the fashion industry looking for glamour and looking for gold to provide that. That makes it hard. That makes it a hard market to analyze. At the World Gold Council, to develop a thorough understanding, we recognize that you can't always rely on one data source. We need to use a number of data sources to thoroughly understand the gold market. I've probably spoken for 5 minutes, but I've probably used 4 or 5 different data points. We've got the London Gold Market Fixing Limited for prices. We've got Thomson Reuters GFMS for gold supply. I've used SNL, Metals and Mining, when I talk about exploration budgets. When I talked about the RBI buying gold from the IMF, that comes from the IMF data. And that provides a rounded picture, a rounded overview of the gold market. And for us at the World Gold Council, we place the emphasis on having a rounded view of the gold market. We don't believe that you can rely on one data source. You need to use a number of data sources to properly understand the gold market. We use the data sources I've described and mentioned, and we use many others. This includes proprietary research. We believe that going out into the field and speaking to consumers and understanding what consumers do, how they behaved in the recent past, how they intend to behave in the near future, we believe that provides great insight into the gold market, and we try to weave that into our narrative. When we're looking specifically at gold demand data, I suppose we do two things when we try to assess it. The most important element is making sure that we have a thorough understanding of the methodology used by the data providers. Now, for many data providers, the methodology they use is their intellectual property. It's not something they want to share widely. But the World Gold Council, the position we're in, we can have detailed conversations with them and make sure we understand that they've got robust methodology and we understand and are comfortable with how they go about it. So that's the starting point. Whenever we have conversation with data providers, we make sure we understand the methodology that they use and make sure that we're comfortable with it. Secondly, where possible, we compare the data and cross-reference it and cross-check it with publicly available data sources. I suppose one example would be to look at China and look at the Chinese data, and we can compare fabrication data produced by the likes of Metals Focus and Thomson Reuters GFMS and compare that to the China Gold Association. Now, we recognize there are going to be differences because different methodologies are used, but we can also, by understanding the methodologies, make sure that we are looking at data that's trending in the right direction. And when there are discrepancies, we can cross-reference them with the data providers and challenge them where necessary. So far, I've talked about quantitative data, but a very important part of understanding the gold market is speaking to people. It's developing the qualitative information and data. And that plays an incredibly important part of weaving into the narrative of gold demand trends. So we speak to industry participants. Events like this are fantastic for me and my colleagues to get out into the field and speak to people in the Indian market, for example. But we also take advantage of our global footprint. We've got offices in the US, in China, in Japan, and a very strong office in India. And before the launch of GDT, probably about 6 weeks beforehand, we have detailed conversations with each and every one of these people to understand how the market's developed, what the key trends are, and what we need to be thinking about when we publish gold demand trends. So I can't emphasize enough the importance that we place on this. At the World Gold Council, we recognize that we play a leadership role in providing good quality data and trying to bring clarity to the market. And through gold demand trends, we believe that we provide an extremely clear view on how the market is developing. That said, as analysts of the gold market, we recognize there are challenges. And we recognize that some people sometimes get frustrated, and often we share those frustrations. We produce gold market data, and many people produce gold market data on an infrequent basis. We produce it quarterly, and that's a great quarterly periodical for people to make reference to and use that to inform their business decisions. But people often want higher frequency data. People sometimes look to monthly trade data to try to get a gauge on what's going on in the gold market. And that's fine, it can be a useful proxy. But we're aware that there are risks of using trade data and other publicly available information and trying to map that to end user demand. For example, when we look at China and when we speak to gold market analysts looking at China, they often look at trade flows between Hong Kong and mainland China. And that's high frequency, yes, but it comes with health warnings. The data doesn't necessarily map to end user demand, and the data can be manipulated. It can be inflated by round tripping as gold just flows on a circular movement between Hong Kong and mainland China. And if we look at India trade data between 2008 and 2010 was also affected by round tripping. So you can't purely look at trade data and take that as a proxy for end user demand. We're also aware that the large parts of the market are still too opaque. They're too opaque for us and they're too opaque for many market participants. The over-the-counter market is particularly opaque. Movements towards exchanges are movements that we welcome. They're more transparent. You can see how much gold is being traded on a regular basis. And that's the type of thing that we encourage. Greater transparency on the market is good for all market participants. And there are still data gaps. We do our best to provide a completely rounded picture by region, by sector, but there are still data gaps. For example, if we just take India, and we think about the conversations that we were having yesterday, and our colleague, our friend from the government was talking about how important it is for the industry to make sure it engages effectively. To do that, it needs good quality data. At the World Gold Council, the team in London and colleagues in India are working hard to generate that data. And the World Gold Council can take a leadership role. As Som described in our policy vision, we want to help organize the industry and help the industry develop. But to do that, data plays a key role. Businesses will need data to help inform their business strategies. But hopefully when businesses become more organized, when businesses develop and they develop the information, there'll be an added benefit of the Indian industry being able to provide higher frequency and more detailed data. A virtuous circle, if you like, and that's something that the World Gold Council is working towards. But we can take a leadership role and we can try and push this forward, but it's something that the whole industry's got to work with us on. We've got to work with colleagues in Metals Focus, Thomson Reuters, GFMS, and the IIBJ. Together we can generate better data and we can hopefully provide greater clarity on the gold market. And that is, those are my opening remarks. Thank you very much.
Thank you, Alistair. I think we're somewhat privileged this morning that we have three of the reputed forecasting agencies for gold coming together at one forum. I'm not sure how often that happens. Sudesh, your GFMS, your Reuters, you're also a well-known industry benchmark name. How do you go about tackling this responsibility of making sure that the data and the reports you put up, A, are correct, and B, can be used for decision makers to decide what they'd like to do?
Can I have the slides, please? Sudesh. Okay, thanks. Good morning to all. Well, just instead of talking about whether the data is correct or incorrect, I wouldn't be the right judge. I'd leave it to the audience here. First, for you to take a judgment on the data, I need to brief you about what GFMS is and how we go about working. Okay. GFMS team at Thomson Reuters is largely known as a global brand leader with respect to precious metal market analysis. It has been in the market for almost 50 years, doing primary research into the gold market in particular. We undertake substantial primary field research and have built a reputation for quality, integrity, and discretion, with the result that we have a wide range of contacts who are willing to divulge their information as long as it's kept proprietary to ourselves. Basis these interactions, we have overall built a fundamental demand and supply patterns over the last 50 years. And this is what you see here on the slides is how GFMS has grown from 1967 to being bought by Thomson Reuters in 2011. Thomson Reuters supply and demand data are collected and collated by a team of research analysts based in Australia, China, Europe, India, and the USA. Sorry, when I say China, including Hong Kong. With an extensive field research program which involves interviewing key stakeholders across the supply chain in every market and utilizing unique data sets to us, researching the market continuously since 1967. And if you look at the collective experience of all our analysts, it together comes to close to about 200 years. Not bad. In order to build up this picture of supply and demand in the gold market, we maintain individual databases, and this is spread for around 90 countries, and the supply database is for 110 countries. Looking at the travel that we do, we travel to something like 70 countries, and I would, in a year, travel to something like 30 cities, towns, or villages in a year within India, because I cover primarily India. And via this primary research, analysts collect information on jewelry fabrication and consumption, coin fabrication sales, bar investment, industrial, electronic and medical use, scrap entering the market, and the proportion of this that is being used to manufacture jewelry. As you look there, we are covering almost all the countries, which means the kind of field research that goes on to it. Friends, before I proceed further, I need to thank my predecessors, who are, of course, not with GFMS currently, but then who laid the stone for starting off GFMS, starting with Mr. Timothy Green, Mr. Stuart Murray, Mr. Paul Walker, and Mr. Madhusudan Daga, who are known as the legends in the industry. And of course, many thanks to my friend, Mr. Sanjeev Aroli. Though none of them are part of it, but then they have laid the primary stone for on which our database is largely built. And also thanks to the sponsors, without which it would be really difficult for us to do such a scale of data collection across the world. So as you see them, PAMP, World Gold Council, Tanaka, Valcambi, CME Group, Ital Prezioso, Rand Refinery, IGR, Jerez, and Degusa, and thanks to all of them. Well, let me now get to this main part, which is regarding the discussion on this. That's how we go about the demand analysis. Friends, there are various approaches that one could take. You could go, what a normal research agency would do is, or rather a market research agency would try to do is go to household, create a representative sample, go to a household, and interview each of the households and understand what's been the consumption, what is the kind of scrap they have sold, have they been buying coins, have they been buying jewelry, what is the kind of jewelry that they're buying. But I come from that industry. I've worked there, and I wouldn't support that for a product like gold or a products like, or rather saying like for anything related to gold. For the reason, just assume, because any of the researchers who are going to come to your doorstep and research, they are largely going to be college-going grads who would rather take it as a part-time, because I used to do it as a part-time during my college days for many of the big brands who wanted to establish their presence in India. So, and would you be willing to entertain them at your doorstep and say, how much gold have you bought in a day or in a year? No, I wouldn't do that. So the best approach is what we called as a bottom-up approach, a top-down approach, and then we come out with the data analysis and data numbers. How do we do that? Okay, here's it. First, let me explain about the bottom-up approach that we do. The first source is from where the gold is coming into the country. Now, unfortunately, we have unofficial also along with this official gold. So there's unofficial and official becomes the first source of flow of gold to the country. And then from where does it flow to? To the bullion banks, the bullion dealers, to refiners. So that's the next stage that we form. Before getting further than, I need to explain the imports, the official and the unofficial numbers, because there's always been a debate with my colleagues around here or my friends around here on the numbers. Official, of course, is all the customs data that you have, and RBI does publish it, but we have gone a little more than that. We have data to the extent of, or rather to the detail as much as like a refiner, a doré refiner, what's the purity of gold that they are refining or they are importing. Is it whether a 92% purity or a 45% purity of gold is present in the doré that's being imported, and from which region is coming from, and is it being supplied directly from the mine, or is it being routed through a bank? Such kind of detailed information is what we get into, and that's how it gets validated. And same way with the bullion bars as well. Now, of course, the coins has been banned from importing. Now, we're talking about the unofficial. Unofficial, well, it's really tough to debate on this front, saying that when we say last year the unofficial number is 178 tons, and someone would say like, no, it was 300 tons. It gets tough for me to say that I have the numbers basis, the strong information from the suppliers, from the people who are importing through unofficial route, from the people who are supplying within the local market in this unofficial route. it's tough to convince someone. But then is the industry who's thriving primarily on the unofficial front, they largely accept these numbers. So this is something we need to accept it, though it can be called for a strong debate when I get back to my seat. Then moving on to the next level is where the jewelry, how the jewelry gets consumed. So many do ask that 69% of the population in India is in rural area. So how do you calculate the kind of jewelry that's getting consumed within the rural India? Friends, we need to understand that would have been a case about 10 or 15 years back when the rural jewelry market was thriving. But then with the kind of progress in the kind of transportation that's happened over the years from rural to a town or from a tier 4 to a tier 2 city, there's been a large shift that's happening towards purchases that's happening in the tier 2 and the tier 3 cities. And the growth is largely been concentrated in those regions than the tier 1 cities. I'm saying it's not largely happening on the urban sector, in the urban regions. It's largely happening in the tier 2 or tier 3. So that's where our large focus is. And the other, many who would argue that I have not been seen regularly in the market. Well, we need to look at the market that's on major focus. The major focus, how we go about focusing each of the market is the per capita consumption. For instance, Tamil Nadu and Kerala together, the population of those two states together is about half the population of Uttar Pradesh. And the per capita consumption of Tamil Nadu and Kerala together is much higher than what you find in Uttar Pradesh or in Maharashtra. So it makes it obvious for me to go around places like Tamil Nadu, Maharashtra, and Karnataka to make an assessment of what's the kind of sales that's happening in those regions, because they together constitute the large pie in the global, in the Indian jewelry market. And I'm sure many of the bullion dealers who are largely supplying to these regions would be agreeing to it, because as such you look at many of the bullion dealers are rather buying it from the dealers who are based in Bombay than directly taking from the banks who are based in Chennai or Bangalore. And also you need to look at that there's always a difficulty with respect to traveling each of the city or town in a year. When I travel to about 30 different cities or towns or villages in India, I'm talking about something like 2 per month. And basis those information, I also need to keep working on the numbers which has to be finally derived at. I have an example here to say. For instance, one of my recent trip to a place, to a city, Jalgaon. There are about 25 villages around Jalgaon, and about 5 jewelers who are dominating that region. It would seem to be a surprise, but that for a small city like Jalgaon, how do these 5 jewelers who are, I'm not going to talk about the numbers that they do, but the kind of tons that the sales that they do, how do they manage? It's largely because the 25 villages in and around city of Jalgaon come to this city to purchase their jewelry. And that's why I say there's this always hub and spoke model that's been built over last, I would say, at least over 7 years. That's the way the industry has grown. And to substantiate that is what many of the organized players are growing as well. Many of the organized players, the way they're expanding, you look at, the more number of expansion is happening towards the tier 2 and the tier 3 cities than growing within Bombay. For instance, someone would have started a shop in Bombay, but they would rather look to invest more further down. Yes. Okay. And when I talk about the top-down approach, And lastly, talking about the top-down approach, we need to, when somebody says that the sales in the city has been of XX tons, it has to be justified. How do you justify it? can justify only basis the kind of income growth that's been happening within that region. When I say the income within the region, how's the rural income growth? What's been the inflation? What's been the real disposable income of those regions? Well, friends, this is what I largely want to take you through on how because India largely focused on the demand side. Let me just focus on the demand side on how we collect the data and how we try to validate it. Any more questions? Any questions on this? Happy to take it. Thanks, everyone.
Thank you, Sudesh. Sorry for pushing you a bit, but we needed to get everyone on. I'm splitting this into two sections. We'll do the data part of it first. Chirag, metals focus. I would be somewhat premature to say, are you the new kid on the block when you look at World Gold Council and you look at GFMS? What struggles do you go through? Because you produce some very interesting reports, and the industry does read them, and it's always nice to see how you go about doing this.
Yes, Metal Focus is, has come into existence over the last 1 year, but it would be, wrong to say that we are the new kid on the block, because the team of Metal Focus is, somebody who's been into the market for quite some time. Our directors have spent more than 15 years into the market. Obviously, some of them have been with GFMS. Some of them are really well known in the industry. What we do is we also, we've got a 17-member team traveling to more than 30 countries, trying to get deeper into the market, meet participants across the value chain, right from government agencies to trade bodies, to bullion dealers, jewelers, as well as consumers. So we try to create the entire value chain and then try to look into numbers, how these numbers could actually be crunched into. So we take deep care to look at whether the numbers are authentic or not, because as you said, it is very important to put out something which is very authentic rather than just,
Let's just toss this about a bit. In India, we always have this thing, there are so many trade bodies, can they all get together? Can we have a uniform platform? Here we see, from a global perspective, 1, 2, 3 research bodies, more or less trying to do the same thing. Different shades of gray, but by and large doing the same thing. Do you guys ever get together and exchange notes, or you don't talk to each other? Sorry.
Yes, I think it's probably best if I field that question. The World Gold Council, we are a leadership body for the organization, but we don't necessarily go out and compile the data ourselves. We recognize that there are other organizations better placed, and they are the likes of Metals Focus and GFMS Thomson Reuters. And as to the question, do we get together, do we speak? I'm sure these guys get sick to death of me and my team contacting them, calling them, emailing them, trying to understand how they're looking at the market, what they're thinking about. Often we pick up news reports about trade data, about interesting things that are developing in the market, and we'll have conversations with these guys to try to gather the information, filter it out, so we can develop a very, very clear view of what's going on. And then we put that forward in gold demand trends. So as to whether we get together, yeah, we speak quite frequently.
It would be great if someone looked at the latest analysis, and I'm not discussing prices over here. World Gold Council, GFMS, Metals Focus, and compare one against the other. Are we seeing a uniformity in the approach, not the precise numbers, but in the approach? Are these three reputed bodies talking to us the same thing? Or as an industry practitioner, I need to sort of weigh one against the other, against the third, and then make up my mind as to what I should be doing. What do you think about that one, Sudesh, before I come to Chirag?
Well, I just detailed my approach.
Yes. Okay. You're sort of saying, listen, I don't know about the others, but I do a detailed study. Huh?
Right.
And therefore, I can speak only for myself. Fair. What about you, Chirag?
What we've seen is that, yes, our numbers may
Anil,
differ.
now you need to get in and get these guys worked up. Yeah.
What we've seen that, yes, our number could differ a bit because, for example, gold is a large market, so you would always have different numbers. But obviously, the approach is similar as well as the trend is similar. So it would be difficult if I would say, jewelry demand is going up, and if, Sudesh would point at jewelry demand going down. I think that is something which we've not seen. I think our approach are similar, and also the trends are similar. We could differ on whether it's X tons or X plus 1 tons, but largely it's homogeneous in that sense.
So my question to you is, do you really do some real data collection, or it's an intelligent guess?
That's a good question. So I would not say that we just do desk research. It's not desk research. We go into the market, we meet people, we talk to them, we visit more than 25 cities in India. But what we also try to do is we just don't visit cities in India. We talk to our colleagues in the Middle East, try to map how things are happening between India and Dubai. For that matter, how is things moving between Zurich in India or London in India. We talk to the transport guys to see how the transportation is happening. So what we try to do is we try to get our hands dirty as much as possible and then come out with data rather than sitting in my office in AC room and just coming out with numbers.
Yeah. So you must be looking at the data collected by all three of you, okay? And there must be some discrepancy or difference between whatever data you generate, okay? So have you ever thought why the discrepancy is and which one is more correct? Have you given some thoughts on that?
Well, as of now, we haven't seen much of discrepancy, I would agree, yeah.
More or less same?
Yeah, it's more, because it's just been I think it's just been a year you started giving out the data, right? And we have been there for doing this for 50 years, and our database is something like, I would say, I have a database of 10,000 retailers in India. Okay, and I run a spreadsheet, something like 8 MB spreadsheet, which has the numbers of how much of consumption each retailer does. So it's the percentage change with each retailer is what gets calculated, eventually deriving the net consumption that's happening. Of course, it's not just 8,000 retailers in India, but I can have a sample of 8,000 retailers. That's it.
अग्रवाल साहब आपसे सवाल लेना चाहता हूँ क्योंकि आपकी कंपनी कमोडिटीज़ में काफ़ी बिजनेस करती है, हिंदुस्तान में रिसर्च भी करती है. आप ये बताइए कि आपको इन एजेंसीज के डेटा पर कितना भरोसा है?
In fact, we look at all the whatever research is there by these companies. We look at all the research, and then we take our own call. But having said that, the credibility, the past track record, that matters a lot. And then you also do your independent evaluation. But prima facie, we have seen that ultimately the research being done by most of the agencies, they tend to point out the direction. And direction is more important than the concrete numbers. So at least we get the sense, which is more important. And I think more or less the sense is always almost same from all the research houses.
Good. So on a lighter note, it's not a situation कि I go to 3 different astrologers और मेरी 3 अलग-अलग जन्म पत्री मिलती है. सबकी जन्म पत्री और by and large एक ही मिलती है. Okay, so thank you for that one. Harish, if I can be presumptuous, Mr. Dubai, and you know India, I think, better than a lot of people over here, particularly from a business perspective. How much do you rely on this kind of data, or you're so involved in doing your own activity that data to apne aap hi aata rahega? How do you sitting that far away look at data as relevant to the Indian subcontinent, not from a global perspective?
The data is quite important, and what we are looking at, when I'm trying to compare the data in Dubai, I'm looking at what is the flow between, except maybe in the last 1 year when, because of all the restrictions, but usually you had enough flow coming out of Dubai as well, as being one of the suppliers. So we were looking at our flow and then trying to compare what, plus the domestic market in Dubai, and then looking at the numbers and seeing whether the trend is almost identical or not. And that was very important to us.
Because there is always this thing कि Dubai से data तो सही मिल जाता है, but relying on data generated from India is a bit of a shot in the dark.
It's a mammoth task. It is. I do agree with you. So Dubai to data you can get from customs, from the market itself.
Customs का data तो 3 महीने के बाद निकलता है.
Yeah.
तो आप 3 महीने क्या करेंगे?
No. But no, in the sense the custom can compile it. I mean, I'm sure some of the agencies are getting better feedback.
So you do have access to some websites that do generate on a daily basis. I know there are some websites that do this.
No, it doesn't. Not in Dubai.
यहाँ from an Indian websites, I know of some websites.
Yeah. There
I'm sure you've been.
Zoba.com and a couple of them are there.
Yeah.
So don't you think what we are doing is sort of post-mortem rather than diagnosis?
On the data side?
Yeah.
No, not at all, because even though it is everything is always going to be a post-mortem kind, but what it tells you is that if you start looking at the demand in a way, whether it is going up, even though it is an old data, at least it tells you how we are going to position yourself going forward. That's always going to be the case.
I'm going to end this thing on data with one very sensitive question, which I will need 1, 2, 3, 4 people to give our views on before we move to the next one. Gentlemen, what's your take on unofficial gold coming into India? Alistair. You're welcome to dodge if you wish.
No. This isn't a topic the World Gold Council can dodge. It's clearly a very important issue for the gold market, especially the Indian market. And it's something that, again, I defer to my colleagues in the Indian office. That it's something that they think about closely. But we've been on record last year talking about how we expected smuggling between 150 tons to 200 tons last year. And this year, how at the half-year stage, we expect full-year smuggling to be north of 200 tons. And that's based on conversations that we have with our colleagues in the field, collecting the data, but also based on insights from our colleagues in the Indian office.
Sudesh, what's your number?
Well, somewhere close to that. There's always a max that...
सब मिलके बात करते हैं.
Well, there's always a max behind any trade. So when you see the Hawala premiums, the rates of, or you just look at the Hawala premiums, the way it's going at. Look at the carrier charges.
So you sort of agree that it's around 200 tons? Is that your number?
I would say somewhere near 150.
Near 150. Let's see what the new person has to say.
Yes, I think there's no denying the fact that the unofficial flows have really, hit off in that sense. And, one way to look at it is we always talk about, Dubai as one of the source, but I think we need to look much ahead of Dubai. There are, porous borders that we have. That is some, area from where unofficial could also come in. And some of the key manufacturing areas like, Thailand and where, carrying is happening, we would say, unofficial flows are plus 200.
Plus 200.
So, Chirag, are you trying to develop a mechanism where you can account for this unauthorized inflow of gold also?
Yes, one way what we look at is we also look at how many flights are coming into India from some of the regions. We've tried to map in how many business class flights, how many economies flights, how many NRIs stay there, what is also the kind of population demographics. So we've tried to look
next
at
time you
areas.
fly business class, you're on his radar, huh? So you watch out.
Actually, more than us, the DRI has kept everyone on radar.
Oh, I'm sure. Harish, what's your take? I know Jerry wants to say something. I just want to quickly finish with Harish on this one.
No, first of all, telling, it would be very, what do you call, it's demeaning to tell smuggler.
Take a wild guess.
No, it's a demeaning
Pick
to tell
a number.
First of all, I want to say it's a demeaning to tell smuggler a smuggler. I mean, they don't classify. If you ask them, they are saying we are in the re-exporting business.
Well, okay, we will debate that later, but you're not going to dodge me on the number.
No, but the figure, if you, during the peak of it, when you had these huge premiums of 10 plus 10, because there was a huge shortage, for the whole year.
साल भर का बताइए.
Yeah, if you're talking from the yearly perspective, doesn't matter
Naturally.
where you start from.
Yeah.
But in a yearly, I would say somewhere in the vicinity of this past year, you are looking at somewhere about 250.
250. Jerry, you want to say something on this? Are you going to pick a number?
No, I don't want to pick a number. I just want to say something in principle.
Okay.
In 1995 to 97, after the liberalization of the Indian gold market, it was good to see that these re-exported were forced out of business. And I think it's pretty sad that they have been allowed to re-establish this business in principle. The activation, or I don't want to say encouragement, but that it is accepted that 200, 250 tons, I mean, we should express this in dollars, and then we know what we're talking about. We're talking billions. And this has been re-allowed without paying taxes. That is not good, and I would like to appeal to the government to change that.
Okay, so that's one part of what we've been debating this morning. I'd like to move on to Harmeshji. One of the topics that we have over here is opportunity in gold mining and refining. You are on the panel, and I'm keeping myself out of this, the only refiner. So give us a feel from an established refiner's perspective. You've been in India for as long as I can remember, and you've been refining gold for as long as I can remember. How do you see the changes that are happening now?
Well, gold and mining, this has given a good development from last 2 years. Anyhow, still we find those refineries are still being underutilized. They are still facing the same problem which they were facing in the past. See, the door has opened up for the Dore market, but it has not reached to all the...
Keep it little near to you.
Hello. Still, it has not reached to the mass people, to the mass refiners. They may have come to the few people, but still there are a lot of refiners which they are looking for the scrap as well as for the Dore bar. This lot of scrap is available in India. Again, you have a lot of hitches in collecting at one place. There are interstates problem, intercities problem. The scrap doesn't reach to the refiners. Things again remains at the same position. You don't get the proper material, so continuity is broke. So you are not in a proper line. Otherwise, mining can be exploited in India. There's a lot of scope. In our history, very well scored. There was a lot of gold in India. I will give a small example. If Kerala produces rice, the Kerala people eat rice. If the wheat is produced in north, the wheat is taken by those people. The same way, from a long history, the gold has been there in India, and we have been using that. But at this moment, we are unable to exploit mines in our country. There are very different reasons. One has to attract miners from the international market.
Just give us 3 top reasons, in your opinion, that you think will help in developing the gold mining industry in India, be it attracting FDI or galvanizing our own entrepreneurs. Just 3 major reasons from your years and years of experience as to what needs to be done.
I would rather say our government should also come out to discover this ocean. This should help out. Plus, we should ask miners to come down to India and invest in FD forms. And the law should be made easily available, where there has been a lot of security threat in getting this material out in India. This has been a major hurdle.
Do you know, I'm sorry to interrupt you. There's a South Korean company called POSCO, arguably amongst the leading manufacturers of steel in the world. came into Orissa 10 years ago, perhaps more, on all promises that were extended to it by the then government of Orissa and to some measure by the Ministry of Steel and Mines, Government of India. It's been 10 years. They still do not have the ability to mine in India, and they still do not have the ability to set up what could arguably be the world's largest steel plant. They even offered to develop their own port at their own cost. And for 10 years, they're going round and round. Now, if I was a Barrick sitting in Canada, or a Kinross, or a Yamaha, these are industry names when it comes to gold mining, I would look very closely at this and say, India, forget it.
That is why I am asking you, you have to build up a complete coordination between the miners outside, the Indian refineries, and the government.
Yes, but how do you go about doing this?
So this has to be, somebody has to take up this position. I think our association can also
So
do that
is
work.
the IBJA willing to don this mantle and say that we will be a lead body
They can
to
be a coordinator
interact
to
with
this
the
bodies.
government?
They can be a coordinator to this body. They can bring people in. They can ask FDI to invest in miners.
Would you be, as an office bearer of the IBJA, willing to head the mining discovery cell in the IBJA?
Well, I'll be open to help out anything if I.
Well, I don't know. I'm asking you as
I'm
the
open to help out
spokesman of the
anything which is
industry.
best possible for me. But this is basically what idea is to, you have to coordinate in every aspect.
Let me ask you this in different way. Are you ready to create more competitors in India? Are you ready to create more competitors for yourself in India?
Competitors are already there. It is not that the competition
सिंपल
is
मेरा सवाल आपसे NIBR का बड़ा नाम है, यहाँ पे बहुत सारे लोग हैं जो आपसे इंस्पायर्ड हैं, आपके जैसे ही गुडविल बनाना चाहते हैं, क्रेडिबिलिटी और वेल्थ बनाना चाहते हैं. क्या रिफाइनिंग में, माइनिंग में उनके लिए भी स्कोप है?
उनके लिए
स्कोप है नया बिजनेस करने के लिए, इस बिजनेस में उतरने के लिए?
ये समुद्र है, इसमें कोई भी आ सकता है, इसमें कोई इसको इश्यू नहीं है.
इस समुद्र में जो मुझे तैरना नहीं आएगा तो मैं डूब भी जाऊंगा.
तैरना ही तो खासियत है, यही तो कोऑर्डिनेशन है.
I am looking for a life
you are one
vest.
of the successful.
खोसला साहब आपसे आपकी स्विमिंग ट्रिक सीखना चाहते हैं.
He has been one of the successful in getting FDI and continuing with this product, and he is getting a continuous product. But the other people who are majorly facing for the continuity of the product, that is a major itch which gives.
2 minute scrap के बारे में, because you depend quite a bit on scrap. There is this feeling that the business of scrap refining is an off-the-books business. People don't really account for it. They come to a refiner, they give the scrap, they get the refined gold back. There is no official transaction as such. So, as a responsible refiner, would you be willing to say that I will not deal in scrap unless it's on my books? Or would you say, I need to run my factory, what can I do?
Well, I have been doing this in books, there's no doubt about it. But there are other scraps available. There are cottage industries, they get it refined at their places. But there is an interstate problem, there is an intercity problem. The movement is very slow.
मैं इंटरस्टेट इंटरसिटी की बात नहीं कर रहा, मैं
That's a
आपके
problem,
दिल की
basically
बात कर
problem.
रहा हूँ कि आप कैश में स्क्रैप रिफाइनिंग के लिए लेंगे.
लेंगे कि नहीं लेंगे? It's
हाँ, वही
another
मैं पूछ रहा हूँ ना आपसे.
We have to follow certain norms.
अच्छा.
As I'm under the.
सर मैं एक आउटसाइडर होने के नाते
अभी इलेक्शंस महाराष्ट्र में थोड़ी समय में है ना. डोंट बी पॉलिटिकल ऑन दिस.
माय क्वेश्चन इज लिटिल डिफरेंट एज एन आउटसाइडर. कल हम बड़े पैनल डिस्कशंस कर रहे थे और बार बार हम एक ही पॉइंट पर आते हैं कि गवर्नमेंट बहुत सारे रेस्ट्रिक्शंस लगा रही है इंडस्ट्री पर, import duty, 80-20, all those things, and for the single reason is we have big import bill due to gold imports, right? दूसरा हमारा पेट्रोलियम प्रोडक्ट्स का बड़ा इंपोर्ट होता है. सो देयर वी आर स्पेंडिंग सो मच ऑफ फॉरेक्स. सो in India, now we are developing so much oil blocks, gas blocks. क्या उसी तरह से जो इंडस्ट्री के ऊपर हमेशा गवर्नमेंट की नज़र रहती है, कहीं भी रेस्ट्रिक्शन लगाना है गोल्ड इंडस्ट्री पे लगा दो, क्या ये ज़रूरी नहीं कि इस एसोसिएशन के लिए, आप लोगों के लिए, कि माइनिंग और रिफाइनिंग हिंदुस्तान में इतनी बड़ी भी की जाए कि यहाँ का कंजम्पशन काफ़ी कुछ यहीं से हो सके? इसके लिए क्या करना चाहिए?
अगर इसी के लिए माइंस को यू हैव टू ब्रिंग देम टू इंडिया, यू हैव टू मेक देम get it over here. You have to have the FDI invested in India. You have to have the government to take part in that. That coordination has to be built up. There is lot of gold is available in India, but it has to be exploited.
इसमें आप लीडरशिप रोल लेंगे?
हाँ जी,
आप लीडरशिप रोल लेंगे?
आपके साथ में जरूर ले लेंगे।
नहीं, हम तो हैं ही हैं, लेकिन मैं एज एसोसिएशन आपसे पूछ रहा हूँ।
Well, as a Asian, I definitely go ahead
All
with
right,
that.
good.
It's a joint venture. It is not the one-man show. It has to be coordinated between
Right.
three people.
Fine.
Definitely.
So that's a little take on scrap and refining. Jerry, I'm going to put you on the hot seat. Basically, this is related to exchange trading, but we've seen some changes. You know, the silver fix and the way it was done has more or less disappeared. There's talk that even the gold AM fix and the PM fix is going to go down a similar route. Would you just like to tell us what the issues are and how this has come about? Because all of us, in one form or the other, use the fix as a benchmark.
Of course, with pleasure. First of all, I would like to ask,
Please.
Why are not more Indian refineries applying for membership for the LBMA or for the Dubai Good Delivery? There are very good refineries in India, and I think they should apply, like MMTC, who is the only LBMA accredited refiner in India. It is a long process, but at the end, it's worth it because you have a global viable product on sale and do not have to rely on a domestic market. You can be independent and globally exporting. I think that's important also for the future. And that's in the hand of every individual refinery. So without, let's say, like government involvement in that respect. Let's go to the fixing now.
Yeah.
I have to admit I am a very staunch supporter of the gold and silver fix as it was. I'm in the professional bullion interbank market since 1978. I'm an extensive user all these years, and I've never heard anybody complaining about the fixing. But it's fashionable to change things, even if it's got to be changed for the sake of changing. The fixing mechanism in silver and in gold is absolutely perfect. And even the now silver fixing, and I'm sure the gold fixing will be no different, there's nothing wrong. It's the best fixing in the world. It really works on supply and demand at this moment in time on a global basis to be in balance. Otherwise, it will not fix. The fixing price, the chairman has a discretion, and that's, I think, 40 bars at the moment, maximum, and then the price actually relies on active business from all over the world at that moment in time. There's nothing wrong with that. It's not like LIBOR, where a few people mention a number, the highest and the lowest get discarded and the rest stand. It's very different. It's actual business takes place. What has to be changed is the delivery of the orders into the fixing. That mechanism is flawed or was flawed because the fixing member itself, the same trader who also trade for the own books of the fixing members, would be in the possession of the orders. This is now taken care of and will be taken care of. The fixing orders will get straight into, let's say, like a fixing computer, who then basically spews out the balance and then puts this balance up in the price for consideration, and then it's either going to go higher or lower, or it fixes at this time. So the mechanism, fixing itself is perfect, will not change because it's the best fixing in the world. The order delivery mechanism, that is changing, and that's a good thing. And I can only encourage over time everybody to accept that fixing as they have in the last 100 years. and to carry on with the silver and the gold fixing there as that, I would say, as that benchmark.